Three, two, one. Hey friends, Ernie from the Trader of Futures here. How you doing today? Today is Wednesday. It is 1 p.m. on the Eastern Seaboard. Here to tackle another issue of the day. Sort of a continuation of yesterday where I put the kibosh. Maybe not fully because I didn't really talk about it in any detail. Put the kibosh on Hyperwave and what it was and what a bunch of bullshit it is. And why people are paying so much attention to Hyperwave. It is nothing more than a poor approximation of a bubble anatomy. The bubble anatomy has been well researched by many that have come before me, including myself, looking at literally thousands and thousands of different types of bubbles in all different time frames. Bubbles happen all the time. They happen in virtually every time frame. It is a fractal occurrence. It is a fractal. In other words, it's scalable. Sometimes bubbles are decades long, or years long, or months long, or days long, or minutes long. But the typical bubble that we're most used to is a few months long. A few months, maybe to a year. They could be in the formation of a bubble for several years. Some of them are big, some of them are wide, some of them are tall. But they all have the same basic makeup. They have what some people would call a bull trap, or I should say a bear trap, leading up to an exponential rise, to a blow-off top, sharp reversal followed by a secondary top. Another sharp reversal to something some people might call capitulation, but usually is followed by what some might refer to as a dead cat bounce. And then into a series of progressively smaller bounces until it reaches some or regresses back to its median. All bubbles basically follow the exact same pattern. Again, some of them are taller, fatter, longer, skinnier, but they all basically follow the exact same pattern. It's a well-known pattern. Hyperwave is nothing more than a trace, a rough trace, like as if you took tracing paper and put it over that, and then you couldn't really see the bubble anatomy, so you just drew some lines over it, and that's what the hyperwave is. What really Hyperwave is probably a good branding. That's about it. In the same way that, Tone Vase has branded the TD sequence in his own vein. It just amazes me that so many people follow people like Tone and Tyler, Warrior Trading, Jason Bonds, and others. The Moon. I watch these guys in absolute incredulous mire. I just don't understand what people are seeing in this stuff. They never get it right. Their analysis methods are not based in any kind of science. There's no statistical certainty or statistical research. There's no edge. It's all just feelings. In a pseudoscience. Sometimes, you might even apply the term swag. A scientific wild-ass guess. But that is even giving it way, way, way too much credit. As if it has some monicum of science. And that's what really upsets me. So I speak about all this stuff from a great deal of experience. Putting the rigor of statistical analysis to these methodologies. Back test, forward walk, Monte Carlo simulations, you name it, I've done it. There is no statistical significance on virtually any of the modern day popular technical analytical methods. I shouldn't say virtual. I should say with something in the order of maybe 97% of them. There are, on occasion, some technical methods that under certain conditions, under very specific rigor, can show some repeatability and statistical significance. When I say statistical significance, I mean that the preponderance of times are predictable. In other words, 67 or a standard deviation. But, you take things like the standard overbought, oversold, or golden cross, or any of these other idiotic idioms. They have no statistical basis. None. None whatsoever. Nothing. Virtually all of them are deplete of any kind of analysis of volume. When in fact volume is the one thing that does have statistical significance, that does have a direct correlation to what is actually happening in the market. Yet that is what, surprisingly, they completely devoid in most of their analysis. All this price action and TD sequence and all this other bullshit. The hyperwave. And that's why it is just so frustrating. They take pseudoscience, try to convince people by branding it that it is somehow relevant, and then ignore the thing that is relevant. Admonish it because they have no real backing or knowledge of it. And when you start taking into account all this historical significance of this, volume, order flow, that is all the professionals and from time immemorial, since the beginning, since there were stock markets, when there were just stock operators sitting on the side of the street taking orders, throwing them up and throwing hand signals to people in windows on phones, to the time that we actually had real markets and then tickers. You had that little ticker machine from Edison, from that time on. Right up through the 80s and 90s, before the internet came upon us, and before brokers found a way to get the average Joe, the retail trader, buying their bullshit, buying their broker narrative. It has all been based around order flow and volume. All of it. The broker narrative specifically, and look, I'm telling you this because I was actually involved in these meetings. When brokers first brought this type of capability to the retail trader, I was there. I helped them implement it. They kept this type of technology, volume, market profile. Actually, it started with market profile. Market profile was sort of a outgrowth of order flow. Started or made popular by Peter Stadelmeier. But up until that time, it was all about order flow. Everything. I mean, I'm sure you've seen in old movies, ticker tape parades. They all read the tape. Tape reading. Orders coming in, the volume of orders. That is how you tell where supply and demand are. And of course, everybody that's teaching price action are trying to convince you that you can see supply and demand in that price action. And you can infer it, but it doesn't show it. Volume profile and volume show it directly. There's no ambiguity. There's no guessing. There's no drawing these kind of ethereal lines and clouds and bullshit, trying to figure out where it is. It's right there. Plain as can be seen. You can see where the market finds value or demand and where it doesn't. It's like it's sticking right in your eye. Ugh. So, when I started looking at Hyperwave and then seeing how they delineate the various phases, which are all created by a few continuing and intersecting trend lines, I'm thinking to myself, oh my God! I mean that is really the bane of it all. Trend lines. Trend lines are bullshit. Market. When there's millions of people in the market, being involved in the market process, do you think that they see trend lines? They don't see trend lines. They only see one thing, and that's orders, levels that are attractive or not attractive, where people get excited or don't get excited, where they gravitate towards or run away from. And they react to that. They react to that activity. They don't react to lines on a fucking chart. They don't react to a moving average and say, oh, it's providing support. That's bullshit. A fucking moving average does not provide support to a price. I mean, you gotta be a fucking retard to think that. There's a lot of retards out there. Then some people were, trying different methodologies like this, the TD sequence. TD stands for Tom DeMark. I have his video right behind me here. I encourage you to go and watch Tom DeMark's explanation of the TD sequence and methodology. And how he came up with it, and how he chose the numbers 9 and 13. Originally, he wanted to choose 8 and 13 because they mapped very nicely with the Fibonacci sequence. But he found that 9 fit better because it gave him more cases, or it was closer to statistical significance for him. Although he didn't do any rigor in terms of statistical analysis. So in other words, the numbers that he chose were arbitrary for the sequence. Completely arbitrary. Listen to him actually describe the technology and try to explain it to an audience. And you will discover that he is nothing more than a snake oil salesman. The pitch is pathetic. It's just unbelievable. Unfriggin' believable. So I put out a video earlier today on volume patterns. I know that most people aren't familiar with volume profile because it's irrespective of time. It is only showing what levels that the market finds value and where it doesn't find value. Again, well, with respect to time of whatever period that you're accumulating that volume. But in terms of a normal time segmented price chart, you have your traditional volume, and that's what most people are familiar with. So what I did was I wanted to point out some patterns that even the tape readers discovered, but they didn't discover it on the chart patterns. But they discovered it through the analysis of order flow. And so I wanted to put it in terms of a time segmented chart. And there were 3 principles, and I encourage you to go take a look at that video that I put out there. So there are patterns that you can discern. There are times when when price is acting a certain way, or it's either stalling or advancing, and you're either accumulating or pushing back on volume. That say a lot about supply and demand, and those are fairly easy things to identify. So I provided 3 of the primary ones, and those in conjunction with the volume profile are very helpful. As you get to study various price chart patterns, there are some patterns that under the certain conditions, like I said, about 97% are bullshit, but as you start looking at patterns and doing the statistical rigor, looking at literally millions of patterns or charts over a long period of time, there are certain things that prop up. And they're very, very contextually aware. It all depends on the setup, the current market condition, the amount of volatility, etc. And then they have some statistical significance. And it's hard to find these, without proper tools. I mean, that's in fact what our AI setups, the artificial intelligence neural network that we use to identify these patterns, that's what it does. It literally looks at millions and millions of different patterns, strategies over decades of data, big data, things that only an inference engine, a pattern recognition machine could do. Humans can't even do it. But there are a few patterns that you can identify that work. I've often mentioned Thomas Bukowski and his thepatternsite.com website, where he has also done the statistical rigor. He has analyzed millions of chart patterns under very, very specific conditions. And then rank them according to their effectiveness and which ones actually have edge and which ones don't. Why anybody would trade anything but the top 10 of those patterns is beyond me. But there are so many different patterns that people look at, and they don't have the contextual background to effectively evaluate them, and they don't have the data behind it to evaluate it, to say, oh yeah, well that has statistical significance. When I say that, I'm saying it's like 2/3 a better probability that it will occur, that it will reach its target or behave the way you expect it to. Things like, just an example, a lot of people will look at like the Death Cross or the Golden Cross. The Death Cross is probably the biggest one that a lot of people show. If you were to look and evaluate and do backtesting of let's call it the Golden Cross, of any market, any major market over the past 100 years, it at best will give you a 35% positive result. In other words, only win 35% of the time. Yet everyone looks at it as if it's a certainty. How can that possibly be? That's what I'm talking about. People look at stuff. They're told, oh, this is a pattern that you should pay attention to. Pay attention to that bullish hammer. Without really understanding under what context that would give you an edge. Everything looks like a bullish hammer to some people. And you know, and just going beyond all that, I mean, getting mired in all that crap. Again, all part of the broker narrative. They want you to be involved in this stuff. They want you to overanalyze stuff and stay away from the volume patterns, stay away from the volume profile, stay away from order flow. They don't want you to do that, because what they want you to do is trade as often as you can. Stay in the market as little time as you can. Create as many transactions as you can. That's what they want. And everything that they've pushed out into this market was designed exactly to that end. So that's why I've, you know, and it took me a long time. I was trapped in these ideas for a long time. Decades. Not understanding. And just kept on, you know, pretty smart guy, thought I could figure it out, given all the tools that are presented to me, that everyone else was using. Thinking that I could do it better. So it wasn't until I met up with mentors, professionals that have been in the market, that have been doing it for decades, that were learned in the old ways of evaluating volume and position sizing and context, that I started to realize. And, you know, and also combine that with my experience with working with brokers and institutional banks and hedge funds. Because even when I was working with them, I still didn't get it, you know, because I was more on the tech side and or the implementation side. But now I coming back, I kind of, you know, I realize what I was doing and what I was involved with. I mean, I realized it to a degree, especially dealing with sell-side analysts, and they should be outlawed. But still, you know, wanted to still try to figure out a way to do it. Like I said, it wasn't until the mentors, they opened my eyes. It was about 10 years ago. So anyways, yeah. Hyperwave is total bullshit. TD sequence, especially Tone Vei's version of TD sequence, total bullshit. Snake oil. Most technical analysis, total bullshit. Most. I didn't say all. Trend lines, bullshit. They get you there, almost. But there's a much easier way to do trend lines. You don't need trend lines. Moving averages, bullshit. Anything that does any kind of look-back calculation and averaging, at best, is giving you a lagging view of what happened. And how do you use that to figure out what's going to happen? Volume profile gives you the market structure as it stands today. It is today, the present. Wow, I get a lot of comments. I wouldn't clump Tyler with the rest of those people. Tyler uses statistical analysis. Well, we'll see. Because if he's basing everything off of Hyperwave, I don't see that. Another show bashing other techniques. No, another show bashing all the bullshit and trying to teach you how to recognize the difference between bullshit and what is real. Hey, Ernie, can you go over the Bitcoin charts and where it's going in the near future? I've done that. The Bitcoin story is done. I mean, I'll come on every once in a while and, add my 2 cents right now, but it is done. It is done at least for the next year or two. After that, I don't know what's going to happen. It's very difficult to say. It will all depend on the state of the enterprise and whether or not they can figure out a way to turn this into a usable technology. But right now, Bitcoin is done. I think there's a good opportunity maybe to start accumulating as it gets down to, the 1,000-point area as a long shot. Why not? I wouldn't put too much into it, but, it's probably worth it. But today, it is done. There's really no reason to get excited. And I'm sure that it will have its little excursions where it might pop up to 4,000, 4,500 maybe over the next year or two. But it's going to settle in on the lower side of a channel between 1,000 and 4,000, in my opinion. So, there's just not much to say. It may have enough volatility that it's worth trading within that range, but you have to keep in mind that it's completely manipulated. There isn't enough people in it to move it. The only people that can move Bitcoin are the whales, and that's what they do. They'll continue to manipulate it. And why would anybody want to get into this friggin' thing anyways, when 96% of the value is owned by 3% of the people out there? Why? It makes no sense. I can see, maybe something coming and taking Bitcoin's place that has a lot of the same attributes, except for an improved governance model that is actually a decentralized kind of republic, a distributed, governance model. The governance model right now is a failure. It will not work. Where do you think silver goes next? It is a good long-term buy. What are your thoughts on silver being much more valuable in the future? Silver, just like gold and most other commodities, are going to rise with the market, with the value of the market, with the inversely to the value of the dollar. It's going to maintain its value over the long term. It's going to have its ups and downs, but the mean price of silver and gold are going to rise. When I say the value, maybe not the value, but the price will rise. The value will stay relatively the same, as most commodities will. And they'll ebb and flow and wane and whatever, depending on the current condition, but over the long term, they will stay with the market. Okay, let's see. A Larry, or is that a Larry? Why Bitcoin if you can have crypto backed by gold or silver? Why have crypto backed by gold or silver when you can just have gold or silver? Why not just have, an ETF or a futures contract or the actual gold and silver? You can go to goldmoney.com and you can buy gold, silver, platinum, palladium, rhodium, whatever you want, and they'll hold it for you and store it for you. And then when you want it, you can have it shipped to you. You can do that with any broker out there. Why do you need crypto backed by gold? That doesn't make any sense. Hey, what about a killer app? Abra. Anybody can invest little as $5 into stocks like Apple, Amazon, or a gold ETF. No KYC, that's know your customer. No AML, that's the money laundering bullshit. No regulatory issues, back to neutral law. Unalienable rights. I really don't know what that means. So, am I to say that Abra is just sort of a proxy dollar for trading all of these things? It's a proxy currency, actually a crypto type proxy currency, kind of like what you can do on Simple FX. That's probably what it is. Razvanica 23. This was the last push before the bottom, before the V bottom. Why anybody would think that there's going to be a V bottom in crypto is just beyond me. I mean, what is the basis behind seeing a V bottom? Do you understand the dynamics that would be required to push it up like that? That's right, Anthony Bricado, and apparently MDIS, kind of misses that point. I do think Bitcoin right now is garbage at this price and at this state of its technology. It is garbage, and I wouldn't buy it right here because it's not worth anything. It might be worth something, around 1,000 or less, given its current usefulness, and if it improves its usefulness, then its value may go up over time. But I don't see that happening for at least the next couple of years. Let's say the next year and a half, maybe 2 years. And when I was looking at Tone Vase, I mean, his analysis, his actually kind of falls in line with mine as well, in that regard. Of course, he has kind of developed it alongside what I've been saying. I didn't see him saying these things, a long time ago. It seems like he's become edumacated after our debate. Now starting to use volume profile. Bitcoin has now been sent over the radio. No internet, no satellite. You could send Bitcoin over a fax machine too. There's no, you could do it over a telegraph. Morse code. You could. I mean, if you had enough time, you could. Absolutely. You would not be able to compute the transactions, the nonces and crypto keys that you would need for the transactions. That would still require a computer, but you could, in fact, send it over, initiate a transaction with very, very primitive technology. Ernie, don't be salty. Just make up your own indicator. Why? There's no indicators necessary. Philip, there is no indicators necessary. You can trade without indicators. I don't look at volume profile as an indicator. It is as much of a primary piece of information as a candlestick chart, because it contains both price and volume. Actually, I think it's a better. So the only difference between a candlestick chart and volume profile is that volume profile contains both price and volume without time, where a candlestick chart is only price and time without volume. So you don't need an indicator. You just need all the information. You need price, time, and volume. It's really all you need. Our Daily Bit says, remember guys, Ernie's AI is coded in MATLAB. Who told you that? I mean, it could be. It could be coded in MATLAB. I know that MATLAB could probably handle the matrix math. When I hear people of influence criticize TA, I like it because it makes it more easier for me to make money using it along with other factors. I don't know what the hell that means. So you stand alone, so when everybody else is failing, you succeed? Arrogant bastard. What you seem not to realize is that TA indicators should sometimes be used to trade with it and sometimes be used to fade it. That doesn't make any sense. It's bullshit. It is. It's just, it's a totally empty statement. What is wrong with MATLAB? There's nothing wrong with MATLAB. It's a good tool. It's expensive, but it's good. Ernie, your thoughts on weed stocks currently? I don't know. I haven't looked at weed stocks for a while. I'm still waiting. I mean, that's a tough area to get into right now, in my opinion. But we'll take a look. I'm really waiting for the U.S. market to mature and to get some kind of federal legislation on weed, apart from the Farm Bill. The Farm Bill, all it does is allow, under very, very strict controls, the growing of hemp and the production of CBDs. Still a long ways to go. All right? So it's doing exactly what I said it would do. It's going to pull back. See, the problem right now is that it's pulling back because, we've recently had some earnings reports, and people are still realizing, and they will continue to realize, that there is very little value, or the value is overstated in most of these weed stocks right now. And so I expect this to come back down below 30 and probably stay within a range of between 20 and 30 for a while until something happens. Something happens in the U.S. More companies get involved. I mean, this entire rise was almost exclusively because of the Farm Bill. Did you try a range chart? I've used range charts before, sure. And tick charts, everything. Been around for a while, Frank. Ernie, if your reward is 2 times or more than your risk, and your win rate is 50%, you'll still be profitable, correct? Yeah, but that's really, really anemic. I mean, I wouldn't enter a trade unless I had at least a 10-to-1 risk to reward. A 2-to-1 and greater than 50% is bullshit. That's what most people are trying for. I must say the Hyperwave does have some importance since it has apparently worked 300 other times. Bubbles always return to the origin. Credit must be given to Ty. But he didn't invent it. All he did was just copy it. there's I use the bubble pattern to predict or to be the overlay for most of my prediction on Bitcoin over the past 2 years. I didn't need Hyperwave. As a matter of fact, Hyperwave would have been less useful. What do you think about trading standard deviation in trend? I don't know what that means. Trading standard deviation in trend. There is a new DApp showing up, trading Wall Street equities backed with Bitcoin to avoid all regulation and location with a minimum of $5. Okay. And that's going to be the killer app. That's what you're going to bet everything on, Frank. $1010110 agrees in 2 years that Bitcoin will probably start seeing some positivity. Maybe. Dear Ernie, I agree with your price volume analysis of Bitcoin, but if there will be an unexpected ETF, why would there be an unexpected ETF approval? Put yourself in the shoes of the people at the SEC. All right? I mean, they have given absolutely zero reason. As a matter of fact, they've given every reason to never, ever approve an ETF. There's one person on that board. One person. Heather Nutcase. She's the only one. Everyone else is like, fuck that. There's no way. All they see is fraud and malfeasance. That's it. And the price going down. And under those conditions, they're going to approve an ETF. No fucking way. It's just not going to happen. So everybody can dream all they want. It's just not going to happen. It's not going to be a surprise. It's not going to be a surprise, first of all. I monitor the SEC very, very closely. I'm on their mail list. I watch all of their happenings. It won't be any surprise if there's any kind of change in sentiment to any of the commissioners or governors or officials. We'll know about it. And it will take a long time for them to wrap that up and come around. A long time. There's no way it's going to be a surprise. Volumetric profile is basically support and resistance. No, volumetric profile is the truth. It is actually what was traded or executed at the bid and ask. It is the number of trades that actually happened at that price. That's what it is. It is the actual truth. As much as a price chart is, only it gives you even more information. It's telling you the specific volume where the most action happened, or the specific price level where the most volume happened. And from that, you can discern where support and resistance are very easily. Very easily. I mean, it like sticks out like a sore thumb. The money-backed crypto is superior to an ETF or gold money because it's possible to transform it into a monetary system without decentralized governance, without censorship and trust. Huh? The money-backed crypto... Nah. Whatever. Someone who's still a fanboy, a sycophant of the whole crypto narrative. Hemp plastic, hemp oil, hemp diesel, hemp clothing. Hemp is the new Bitcoin. I agree with that 100%. You want to get involved in something that has real value, get involved in anything that has to do with hemp and the marijuana industry, cannabis and hemp, period. That is going to be increasingly a larger and larger and larger part of our economy. It's going to take a little while, but that's where it's going to be at. Why be an angry old man to market your subscription and courses? Why not just be a nice guy and stop bashing the massive idiots? Must bash the idiots. I'm not an angry old man. You obviously don't know me. The 2.618 fib extension of the current upswing from the lows puts us down to 1200, lines up with what volume profile says for the lows. It doesn't surprise me. Doesn't surprise me. You know, that it lines up. That doesn't mean that, you know, somehow the fib had anything to do with that, but it doesn't surprise me that it lines up. MATLAB isn't expensive if you download it for free through Uni. I don't know what Uni is. But MATLAB is extremely expensive. I'm sure that there's a trial version. Or a version if you're in school. But I'm not in school. All these people, my Tim Vey and Bubble Butt and Hyperwave, they are all scams. I think you were saying Tony Vey. Well, I look at the technical analysis stuff that Tone Vey's does as being so pedestrian and so basic, and he's charging so much money for it. It really is a crime. It doesn't have any real value. It has no value as far as I'm concerned. Chris is asking, in your experience, what have the most useful Bulkowski patterns been? I'm in the process of weeding through his research, and it's going to take me a while. Well, what I would do is go to his candlestick patterns, and he has a link there for the top candlesticks. I think he's also done that in terms of their occurrence and their profitability. And he has the top 10 there. You can just look at it. I've also gone, it takes a long time to go through all of his stuff because he doesn't put everything in order. He ranks everything, but he doesn't have a specific order in terms of ranking because there are too many variables to do that. But in terms of the candlestick patterns, he does have a link there for the top candles. And, I've actually... I'll show you. So I've accumulated them all in these tabs here. So they're all here. Number 1, 2, 3. Number 1 and 2 are basically the same thing. They're 3-line strikes. 3 is white. 3 and 4 are the White Soldier and Black Crow, which are basic opposites of each other. Evening Star. A Tasuki Gap. It's probably something you never heard of, but it's another very specific pattern that he's found. Bearish engulfing. Inverted hammer. Now, all of these, don't just go and say, oh, I'm going to use the inverted hammer without understanding the context. If you don't understand the context, just forget about it. Because you'll probably apply it to something that isn't statistically significant. So anyways, yeah, just go to his pattern site and look for the top ones. It makes it easy. Ernie, does the volume profile work statistically better in trend or in a ranging market? It's not. That's not the right question. Does it work better? Volume profile works in all markets. Whether it works better, that depends on your ability to analyze that particular market. Or understanding, what are some of the volume patterns associated with a trending market. Like if you go and look at my video that I did earlier today, that will answer your question, Michael. Where I find various volume patterns. I gave 3 for different types of price action for trending and ranging markets. Eugene McFarlane, how you doing? Use Abra. You can buy Bitcoin, and with Bitcoin, buy a fraction of the stocks, such as, that's no different than Simple FX. They do exactly the same thing where they use the crypto as a proxy to the other, not only stocks, but also futures. I know about that. I mean, there's a lot of people that do that. I could see them approving an ETF in order to use it as a catalyst to dump to 1K. No. Why would the SEC do that? That makes no sense. They don't give a shit about Bitcoin. Don't you understand? They're not going to sit there and try to manipulate it by creating an ETF. That's just not going to happen. That is not their charge. It's not their purpose in this world. Their purpose is to create stable markets and a fair amount of safety for the consumer. That is their purpose. That's it. And to police it, to regulate it. Thank you for the info, but you do look angry. That's okay. I don't care. I really don't. If it gets through to you, I'm not going to... A lot of people... Maybe you like really happy guys. I can be happy. A lot of times I'm happy. But I'm here just... I have to accentuate all this bullshit that's going on out there. It's the only way I can get through to some people. Life experiments and hacks. I like that name. BTC is going down. Okay, well, we all know that. Yeah, Black Lightning, I figured that's what uni meant. That's why I said I'm not in school. And I agree with hemp. It's going to take a little while still. There's still a lot of stigma with some of these old folks. Bear market looks so similar to 2015. I think it's completely different. It's a completely different political situation, completely different economic situation, completely different dynamic between us and our biggest competitors. Everything about it is completely different leadership. Everything about it is different. So I'm not sure exactly what you mean by different. Looks the same. I mean, are you looking at the chart and you're saying, putting on fuzzy eyes and says, well, it kind of looks the same? Well, that's not how you judge whether something is similar or different. What are your thoughts on Bernie Sanders and his stock buyback ban? I feel like they hate the investor. Bernie is a socialist. Did you see Bernie's face when Trump, during his State of the Union, said, "We're free in America, there will never be socialism"? And he was like, his heart sunk. He's a fucking socialist. Bernie is irrelevant in the United States. The Democrat socialists are irrelevant. We're seeing them for what they are. They want to take away your freedoms and have centralized planning. So fuck them. Fuck them to hell. That's what I say. You don't understand how you think trend lines are irrelevant, because they do not portend anything. They are a, what's the best word? They happen to line up with the volume profile. So they are another type of analysis, not nearly as accurate as the volume profile, but they do line up with the volume profile every once in a while. But they are not really showing you the actual levels. They're showing you levels based on price action, and that's not where the actual support and resistance is. It's close. It can be close, but it's different. They are an approximation, I guess you could say. Sometimes. Most of the time, they're just bullshit, depending on how you actually draw them. So overall, there is no real standard behind trend lines that mean anything. You know, just because some data points line up does not mean anything. There could be, there may be something to some, if you have enough people that are watching a particular level or a particular chart, or if it's maybe advertised enough on the financial networks and people are looking at it, and you can get enough people to draw it all at the same time, maybe it will have some relevance, but not because of the market, but because a lot of people are looking at the same frigging thing, and they might have some influence on at least a portion of the market. But other than that, it means nothing. All right, I am done. We're at an hour. I have my client coming up soon, so we'll have to say adieu. I'm going to start putting out more short videos like I did this morning. Getting back to that. That was my original charge all along. I've been doing this hour-long show for quite some time, but I understand that some people want to get condensed information. And actually, that's what my courses are so good about. Explain what you mean by a killer app in crypto. Like email. Email is a killer app in the internet. All right? We need a similar app in the, not just crypto, but maybe in crypto, but in the distributed ledger space. Something that everybody can't do without. That's easy to use, that has real usefulness. That it actually improves their lot in life. So anyways, I have a volume profile course coming up on Saturday. The code down below here will get you $50 off. And there will be an additional thing. It is going to be, I'm going to announce it tomorrow for Valentine's Day. It will be good for tomorrow and Friday only. That I'm going to add something to that. So you get the $50 off, and I will add something to that. But I'm not going to reveal it until tomorrow. So sign up for Volume Profile. Along with it, you have lifetime access to the Volume Profile stuff. I am also adding something to it that is going to be big, and I think that you'll enjoy it. Thank you very much. 5-star profile, 5-star reviews from all the students. See you later. Adios, amigos.